And are they willing to just be the minority shareholder, just having this passive dividend, passive income for them and their family, and having the understanding and the ability that the business will be fine after they just left their operational job?
Yeah, that's really interesting because, again, we are working in a very, very mathematical, logical space, but we tend to be psychologists as well, especially with sellers and especially those situations. When we're dealing with private equity firms, that's mainly what we do, private equity to private equity, or like groups to groups, entities to entities. It's much easier. It's all about the deal itself, less about the kind of connection to that company. But in our space, especially when we are going for M&A deals in the online space, you have a lot of owners and they are just entrepreneurs, right? And they are dealing with those problems. So your question was in terms of how often it is. Yes. We see that a lot, especially. So we have, again, I will divide it into two categories. We have those who are open to stay in the business, and that's where you can be more creative with those ones. And then you have the second option when just people want to exit completely. And that's where you need to bring a buyer that can really operate it from day one or from day 90. Usually it's like 90 to 120 days of that transition because they want to get out and that's it. And we see that a lot. But mainly, especially in this market, we see a lot of entrepreneurs, business owners that are willing to stay. They're willing to sell the majority of their stake and pretty much be 20% or 10% shareholders and keep operating the business. And right now they have even more money. So they either stay as a role leader, like a leader in the company, or they are just being an advisor